National Australia Bank has increased their fixed rate mortgages. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your morning stein of coffee because the NAB have increased their home loan fixed rate mortgages once again. This seems to be a steady stream of very small increases that are just chipping up, but over time it'll add to a decent amount of additional expenses people need to spend on their mortgages. Now, there's a few things we need to just remind everyone out before we have a look at this. And I'm just going to bring up this one definition here. Bear with me as I find it. With regards to, well, two things. Housing stress, and then we'll look at also, there we go, there's the definition. Housing stress and then low income. So housing stress is typically described as low-income households that spend more than 30% of their gross income on housing costs. Now, it's not everyone, it's only low income. And what's the definition of low income? It's refers to the 18% of households in the lowest equivalized disposable household income quintile, adjusted to exclude the first and second principles. So there you go. This is from the ABS, guys. So, it's the way it is. But I'll bring up this chart here just to show you the significant difference, everyone, in household income and disposable income for people. You're talking the upper end over $2,000, the middle just under $1,000, and the lowest at $433 a week. So you can see how this can have different impacts to people. So if you're earning, at the upper end and you're spending more than 30% of your income on housing and interest rates go up, you should have the capacity. Maybe you've got a diverse income stream, you've got other skills to adjust. And there are a lot of people out there that are predicting as interest rates go up, everything's going to collapse, housing will correct. I'm just skeptical of that because there's probably a whole lot of people out there that haven't actually had to budget. And remember, the banks factor in about a 3% buffer now for interest rates higher than they actually are. So let's have a look at this. And this was sent to me by an anonymous broker, and I could find it online. So the NAB announces increases to home loan fixed interest rates. NAB has today announced increases to the NAB Choice Package and tailored home loan fixed interest rates for owner-occupiers and investors. These changes are effective Wednesday, the 22nd of December, 2021. So if we have a look here, let's see. We've got a 0.05, a 0.1, 0.05, 0.05. So the biggest change was 0.01. Owner-occupier principal and interest. The one I like looking at is 4 years. The old rate is 3.29. The new rate is 3.34. We have a look here, principal and interest. We can see for residential investors, 4 years is 3.49 up to 3.50. These are still very low interest rates, guys. Money is still very cheap. Interest only in arrears, that's going up from 2.89 to 2.99, interest only. And interest only in advance, 2.79 and 2.89. This is to do with how you're paying it at the beginning or end of the month. And now we have, again, this is, what is this? Fixed rates for the tailored home loans. And again, the biggest increase is 0.1. We can see here 5 years for owner-occupier, principal and interest, 3.59 to 3.69. So these rates are effective from from today. Existing NAB Choice home loans and existing tailored home loans where a customer applies to switch from a variable to a fixed rate or refix their loan on or after this date. Okay, so it's applying to new loans and to existing ones that are switching. So if we have a look here, what's the implications of this? So I've put it in my Excel, based it on $580,000, which is the median mortgage here in Australia. We're going for a 4-year owner-occupier interest and principal. Say you're borrowing right now for 30 years. You're going from 3.29 to 3.34. That's an increase of $15. What's that $4 calculating there? I'd have to figure that out. Anyway, it's an increase of $16. So a 0.63% monthly increase. So, I mean, okay, $16, it's not a lot of money. I drove home late at night last night, and I was very naughty and stopped in at Macca's, and it's probably how much I spent getting a coffee and a extra meat Big Mac. So would say it's a cheap junk food meal. That's what it is. Or it's, 2 weeks worth of 7-Eleven coffees. Or it's your Netflix and Disney Plus bill for the month. Or it's a decent proportion, 15% of, say, a decent internet connection or a mobile phone bill for the month. So, well, this is showing you how much other things cost relative to your home loan. But that's still, slowly creeping up, everyone, compared to, let's, if you were, the interest mortgage rate I have at the moment, so if you were at my locked-in rate of 1.99 and then jumped to 3.34, that's an increase of $412, nearly a 20% increase, 19.75. Now, this is what is going to have the real impact. People are going to have to find like another $500 a month to deal with these changes. So once you get off the bandwagon. But the hope is that people are preparing and planning for it, guys, that they're saving, that this, saving that they have, they're either cashing up, they're generating passive income with it, they're not just frittering it away. Am I naive to think that, everyone? Am I naive to think that? So let's have a look here at some of the other ones. Let's say a residential investor, what's the biggest interest rate we have here? 3.79. So we're going 3.69 to 3.79. 3.69. And let's see how much is the rent going to go up. There you go. Don't forget the decimal points there, Florian. Okay, so the rent will be going up $30 a month for those of you that are renting from these people. So 1.23%. So there we go, guys. Now we've got to remember, everyone. People have, and I'm going to bring up this one. They've made prepayments on their mortgage. People are ahead. You've got people with significant household liquidity buffers. They're concerns that we're going to head towards more people in negative equity, where they actually owe more than their house is worth. And surely there will be some people that are at that level. But remember, this is housing, guys. Are the investors going to jump ship really quick, or are they going to hold on? Remember, there's a lot of costs to shift this. It's not like a shares where you spend $10 and boom, you're out of the investment. This is a pain in the ass to liquidate this property. Anyway, guys, let me know your thoughts and opinions on this one. Are you at all surprised or worried about this? It's what's happening. Interest rates are creeping up. Check out this video about, well, the last interest rate increase, guys. They're slowly going up. Are you prepared for when rates are going to go up? Have you done the sums? Have you sat down with the missus going, okay, rates are going to be at 5% when we get out of this. Can we afford it? If not, do it now. See you later.